Well, it's July, so tax time is here, and if you're feeling the pressure, you are definitely not alone this year with so many details to manage. It is easy to miss deductions or key documents that could cost you with our good friends at the ATO. For more, we're joined by Dr. Steven Enticott from CIA Tax. Great to see you, sir. What are some of the key things people miss?
Well, let's talk about my psychology first. I'm feeling a lot better. So at the end of a financial year, we have a lot of people who know they've got big tax bills, and they come in at the last minute. So they're the why people. So why?
Why
A lot of counts, that's right,
Yep.
why.
Yep.
But once you get that magical July 1, we tick into a new financial year, and everyone who's sitting on a big refund all of a sudden magically appears in the door. And that's right, exactly. When can I have it, Dr. Steve?
Yeah.
Or, my family is dependent on this. When can we do it? So it's a lot. It's a lot more exciting this time of year. People are getting the refunds. Money is pouring out of Treasury at the moment, paying people's refunds. So
well,
it's
they've spent all year taking it off us. It's nice that every now and then we see some of it back.
Exactly.
So what are some of the most common things that people overlook?
Yeah, so I'll go through with my 2 or 3 favourite tips. So the first thing I always tell people is to review last year's tax return. So people go back to last year's tax return, look at what you've claimed, look at what your incomes are, look what your interest is, and start looking and searching for those things.
I would generally imagine that if you've been in the same job, living in the same house, doing the same thing, it's pretty much the same as what you applied for last year.
Yeah, generally, and a lot of it is, if you go too soon, a lot of the data hasn't been sent from the financial institutions to you. So if you've got ETFs, which a lot of people have now, exchange traded funds, well, they're not a traditional share that pay the dividend and you record it as income. They're actually part of a managed fund, and generally you'll need to wait till July, August, September. So the biggest tip I have is have a look at last year. Have a look at the ATO portal if you're brave enough to log on with all the security issues they've had there, and double check your links.
If you can log on.
If you can log on, that's the other thing too, because it's out of control. And if that data's not there already, just pause. Wait till August, September. I know we're keen to get our refunds.
So that's a great point. People rush, right? They wait for June 30. They think, off we go. Let's get that money back. I needed to pay down the credit card or to organise a holiday, whatever it might be. But as you say, the data isn't necessarily already there.
But if your affair's dead simple and you haven't got anything like that, rush, go for it. But just make sure everything's ready. So I try to tell people wait, because if you rush and you do it and you haven't got all the information, in about 9 months' time, the ATO is going to send you a please explain letter, and then you're going to have to come in and redo your tax return.
Now, I was on the CIA tax website this morning having a look through this, and you have a checklist. You love a good checklist. Talk to us about the importance of a checklist when it comes to preparing for your tax.
Yeah, because there's a lot of things we forget. Like, people like me, we're immersed in tax. We never think about it. We often say there's nothing happier than a tax-deductible life. So we're always thinking about tax. But if that's not your world, you really got to start by looking at last year's tax return, grab a checklist, which is on the CIA tax website, go through those items, because there's a whole bunch of prompts to think things you need. Come in too early or come in underprepared. We're just going to send you away with a list of these are things you need to find, so get ahead of the curve.
Now, just as we think we're doing okay when it comes to tax, the ATO, the system, likes to introduce new ideas, new thoughts, new rules. Is there anything new we need to be aware of for 2025 in particular?
Yeah, nothing significant. One of the big things I find catches people out, one of the biggest problems I find is, if you've put in money into superannuation, so if you've done it through salary sacrifice, that's fine, unless you've put it into after-tax dollars through salary sacrifice, or if you make a contribution for the year, and you submit your tax return, but you haven't notified your superannuation fund that you're going to claim the claim at the tax office, it's not a deduction. So if you're doing it yourself, most accountants will run people through and go, have you put money into super? Have you notified the fund you're keeping it? You're going to claim it as a tax deduction. Because the moment you lodge your tax return and you haven't notified your super fund that you're going to claim it, you've lost the deduction. So really critical, that one.
It's a really interesting one. But I think one of the interesting ones too is that everything is electronic these days. We're completely tracked. The ATO knows more about us than we probably do, right?
That's right.
So the idea of conning or creating a scam or coming up with an idea to try and get more money back must be getting harder and harder.
It is, and another one I want to point out too that's really getting harder, as you say, the electronics picking up, but the data matching is getting better and better.
Yeah.
If you've had any crypto trades, if you've sold any property, the ATO already know about it. So
isn't it funny, a lot of people got into crypto as a way to try and get around from the establishment, get away from the system, But in order for it to become something that was valuable, people wanted it to be part of the establishment, and now they're finding out the hard way at tax time.
The hard way, and don't ignore it because the ATO already know about it, so make sure you address it. Look, the big one's health insurance, we find. Data matching on that's phenomenal. If you have private health insurance and you earn over a certain income levels, you don't pay any extra tax. But if you do earn a significant income, and I can go to our website and you'll see what the ranges are, and you don't have health insurance, you do get slugged with an extra tax. But the key is, the rule says you and your dependents.
Right.
So if you've entered a new relationship and you've got single health insurance, and you've taken on a new partner who has children and they're not covered by your health insurance policy, you're still going to get slugged with the tax anyway.
Gosh.
So health insurance is probably one of those big ones. Crypto is one of those big ones. They're all data match. They just get picked up.
Gosh,
so
they're
you have to be ahead
family-based,
of the
aren't
curve.
they? They certainly love to bring everyone together. We better leave it there. As always, appreciate your time. It's a difficult time for many.
That's it. One final one I wanted to get across: depreciation. New rental property that you've done significant amount of repairs on can be depreciated, or a brand new property can. Don't forget that one.
Well, that is some good news, at least finally, and a difficult time. Thank you so much. Talk to you soon.